Hi everyone, Ricardo Gonçalves here live from the SBS newsroom. There is about a minute or so to go until we get the RBA decision on interest rates for the month of July. Expectations of a 50 basis point lift that would take the official cash rate to 1.35%. If that happens, it would go back above pre-pandemic levels. And the last time the official cash rate was that high was back in May 2019. Back then it was at 1.5%. So why is the Reserve Bank looking to lift interest rates? It's to control inflation. The headline rate of inflation is at 5.1%. The Reserve Bank expects it to go up to 7%. It could even revise that even higher. So it wants to lift interest rates as soon as possible to try to control that. We're seeing the Australian share market, the 200 at 6,623 at the moment, keeping an eye on that. And also the Australian dollar 68.78. Now that announcement should be coming through any moment now. Of course, it will have implications for borrowers and how much they pay on their mortgage. So just a few more moments to come from the Reserve Bank. The decision should be coming through any second now. Just waiting for that announcement to come through on the RBA. Here we go. So the Reserve Bank has lifted official interest rates by 50 basis points to 1.35%. So that is the highest since May 2019. Taking a look at the statement, it says that global inflation is high and boosted by COVID-related disruptions like supply chains, for example. The RBA also saying that inflation in Australia is also high, but not as high as it is in many other countries. There's strong demand, a tight labour market and capacity constraints in some sectors, which are contributing to the upward pressure on prices. Also noticing that the floods are also affecting some prices. Here in Australia, of course, we know that because of that high price of certain foods like lettuce. On the upside, it says inflation is forecast to peak later this year and then decline back towards a 2 to 3% range next year. So if you are joining us right now live, the Reserve Bank has lifted the official cash rate by 50 basis points to 1.35%. Just taking a quick look at what the RBA is saying in its statement. It also adds that the Australian economy remains resilient and that the labour market is tighter than it has been for some time. A source of uncertainty ongoing about the economic outlook is the behaviour of household spending. So as interest rates rise, the RBA is uncertain about how much consumers will spend. That's kind of what it wants to see, though, because that's one way to try to bring that inflation rate lower. The board also saying that it will be paying close attention to the global outlook, which remains clouded by the war in Ukraine and its effect on prices for energy and agricultural commodities. And the bottom statement is what we want to take a closer look at, because it says today's increase in interest rates is a further step in the withdrawal of extraordinary monetary policy that was put in place to help the Australian economy could cope during the effects of the pandemic. Remember, the official cash rate was 0.1% in November 2020. It also adds that the resilience of the Australian economy and the higher inflation rate mean that this extraordinary support is no longer needed. The board expects to take further steps in the process of normalising monetary conditions in Australia over the months ahead. So that's actually an interesting point, reading that aloud. That pretty much means more rate rises to come in the next few months, because the RBA is saying the board expects to take further steps in the process of normalising monetary conditions in Australia over the months ahead. Final couple of lines: the size and timing of future interest rate rises will be guided by the incoming data and the board's assessment of the outlook for inflation and the labour market. The board is committed to doing what is necessary to ensure that inflation in Australia returns to target over time. So taking a look at that, the key things: the Reserve Bank is lifting interest rates by 50 basis points to 1.35% because inflation is high in Australia, but it has warned that rates will continue to rise over the coming months. It may have suggested that rates will either stay on hold after that or even potentially fall, because that's what some economists are saying. Because if it is right and that inflation rate peaks later this year and then comes down to 2 to 3%, that's its target band, but that's still some way away. So what does it mean for you? If you have a $500,000 mortgage over 25 years, your average repayment will rise by about $137 per month based on this rate rise. If you've got a $750,000 mortgage, the mortgage repayment for the month will now rise by $205. Now, remember, though, this is now the third straight interest rate rise. So if you take in consideration the rises we've seen in May, June, and July, if you've got a $500,000 loan, you will now pay around $333 more per month on that $500,000 loan since May. So that's quite a number. But like I mentioned, the official cash rate will continue to rise, and there are expectations it could go anywhere to around 2.5%. One of the consensus levels is 2.35% by the end of this year. So some are saying that the cash rate could lift to 2.35% by the end of 2023. That's a full percentage point. If that happens, then the repayment on a $500,000 loan will rise by $613 a month since the start of the rate hikes, which we saw in May. So we'll have more details on SBS World News. That is coming up at 6:30. You can go to the website sbs.com.au/news. That breaking news, the Reserve Bank did lift the official cash rate by 50 basis points to 1.35%. I'm Ricardo Gonçalves. I'll see you during the news.